If you're anything like the 99% of people trying to trade order blocks, then your trades probably look something like this. You have a very valid order block identified down here. Then you wait for price to come into it, and it looks like it is giving you a nice reaction from it. The trade looks good. The trade looks like it's going to be a winner. And then for no reason known to you, it ends up reversing and stopping you out of this position. This is what happens to most people trying to trade order blocks. So if this is an issue that you're facing, in this video, I'll teach you how to identify valid order blocks so that you no longer need to worry about taking bad setups. Now, in this video, I'll be going over 4 main things. The first thing I'll go over is what is an order block. The second thing I'll go over is how to identify them. The third thing, the 3-step plan that I use to be able to be profitable with order blocks and spot the correct ones every single time. And the fourth and most important thing, my exact strategy, which uses order blocks to give me a 70% win rate when I'm trading. So guys, without further ado, let's get into this video. So the first thing, what is an order block? Okay, as you can see right here on my charts, an order block is an area of price where there will be large buying or selling orders, depending on if the market is trending lower or trending higher, okay? Now, I'll get into how to identify this order block literally in 30 seconds. Okay, but what we need to understand first of all is that price will trend higher into the order block. And once it taps into the order block, that's when you can expect to see a reaction from it. And of course, from here, that's when you would look to place a sell position. You can target this liquidity down here. And as long as the order block was valid, that will be hit. And that's essentially how we use order blocks, okay? So they're super important. You can really catch big trades with them if you can identify them correctly. So now let's go and explain to you how to actually identify these order blocks. So the first step in identifying order blocks is we want to see a large reaction from the area we're looking to trade, okay? That can be shown from this candle right here. As you can see, there was so much selling volume coming in from this area, and that is a good indication. It's not the only indication, but it's a good indication that this area might continue going lower, leaving an order block for us to trade into and then look for a sell, okay? That's the first thing we want to look for, and that's a very important thing that we need to make sure we see is large selling pressure if we are looking, of course, to trade from this supply zone order block, okay? Now, very quickly, order blocks can be called multiple different things. People call them supply zones, okay, or demand zones, depending on if you're selling or if you're buying. For example, if you're selling, then this here would be a supply order block. And if we were looking to buy, for example, then it would be the other way around. It would be a demand order block, okay? But in this example, this here will be a supply, okay? So the first thing we see here is large selling pressure, and that is caused literally by this candle here. Now, another good indicator of if a supply zone or order block will be valid is we want to see if it leaves an area of inefficiency, also known as a fair value gap, okay? So as we can see right here on my charts, we do have a fair value gap, which was left right in here after we saw that big move to the downside on this 5-minute candle right here, okay? This leaves a fair value gap, and this shows you that there was large selling pressure from this area, and we can tell that simply because a fair value gap was left. That's just a simple good indicator that this area is giving us a nice reaction. If there's no fair value gap, that is very likely that the reaction isn't big enough to consider this a high probability supply zone or order block, okay? The fair value gap being left here is literally the indicator that this area possibly, not 100%, but possibly could be a very nice area to trade back from if we are to, like I said, come back into it and then look for something like that, okay? Now, once we've identified this fair value gap in the market, now it's time to actually correctly draw on the order block, okay? Now, when it comes to drawing order blocks, people's variation and how they draw them will always slightly differ. However, the main thing and the most important thing is that you've identified, first of all, like I showed you, this area of fair value gap. Now, once we've correctly identified that this area here is showing us a large amount of selling pressure shown by this fair value gap right here. And by the way, if we have a deeper look into this, a fair value gap is essentially the gap left in between 3 different candles, okay? So you can see right here, this is candle number 1, right? And the bottom of this wick is going to be the start of the fair value gap, okay? This is candle number 2. the big candle with a very large amount of selling pressure, okay? And then candle number 3 is going to be the third candle, right? The following candle, which is the bottom of this fair value gap, okay? So that's how you identify fair value gaps. It's simply a gap left in between 3 different candles, and number 2 candle being the biggest amount of selling or buying pressure, okay, in a certain direction. So now that we've identified that, so now the next thing to do is identify the order block that we're looking to trade from, okay? What we can do is very, very simply draw out the last up candle before the move down started. Now, there are 2 sort of order blocks you can actually do from this area, and this is also where people will be going wrong, okay? The first thing they might do is draw out this order block right here. This, yes, is an order block because it did cause a big amount of selling pressure from this area. However, the issue with identifying this order block here is simply for the fact that it's not covering the highest point of the move. The highest point of the move, as you can see, is up here. So ideally, you want your order block to be covering this entire range, okay? And this is something that people don't actually speak about too much. They'll tell you to identify it as this, but then they don't explain to you the importance of having it cover the entire range, okay? Now, the reason this is important, okay, is because let's imagine price comes up into here, okay? It might react from it, but it also might go a bit higher to tap higher up into this range and then reverse like this, okay? Of course, if you're only marking out this order block, then this here would be a losing trade. But if we had marked out the order block as the whole thing like this, okay, including the top wick right here, then you can see here, this would have been respected and this would have been a winning trade. So there's a very big difference when it comes to marking out order blocks correctly. And from my experience and from the experience of others as well in the space, it makes a lot of sense to always cover the highest point of the move, okay? So for this example, although this is the candle here that caused the move down, I would still mark out this entire range here just so that I have more breathing room so that when I do come to take a sell position, I'm not entering too early with my stop loss like this and getting stopped out, but I'm actually able to enter with a bit of a bigger stop loss, covering the entire order block. And that way, as you can see, when price does come into it, I don't lose out on this position, okay? So, as you can see, price actually did come up and it would have actually taken out the first order block, okay? As you can see right here, if we were just focused on this order block that gave us the fair value gap, right? This here would have been a losing trade. But since I'm looking at the entire area, okay, that there is now a winning trade, and that's simply from expanding the order block slightly, okay? I didn't make it super big to the point where it doesn't make any sense anymore, but I simply made it a little bit bigger to cover the high up here. That is super crucial in actually, first of all, identifying them correctly, avoiding unnecessary losses as well, because trust me, so many people would maybe take a loss here and it's just unnecessary. There's no reason to do that, okay? And then, of course, as you can see, this order block was respected and that there would have been a perfect winning trade, okay? You could have literally set a limit order here. You could have entered manually once we came into this area, okay? Regardless of what you did, this here would have been a winning trade, and that's using order blocks to perfection. Now, one thing I want to show you quickly before I move on to the 3 most important things to identify these order blocks is a losing order block position as well, okay? Yes, this trade here won, and yes, you can see there was large selling pressure when we would have taken this sell right here. However, when price came back into this area, as you can see, it ended up going through it. Now, let's identify why this happened. Now, the first thing to show you guys is that this area here did not leave us with a fair value gap. There is no fair value gap to trade from. And yes, we did have a big selling candle here. However, this candle after the third candle did not leave us with a fair value gap. And that's the first reason why this order block here wouldn't have held. Now, the second reason, and a very important reason again, is that once the order block's been reacted off already, the chances that it reacts from the same area again a second time is always going to be a lot less likely, okay? So this area here caused this reaction to the downside here, okay? That was the first winning position. However, for it to react from it again a second time is less likely, okay? And as you can see, price will eventually come into it, okay? However, it doesn't really respect it. It does give a bit of a reaction, nothing crazy, and then it ends up going through it. And the reason, first of all, is because there was no fair value gap from this area. And second of all, this area has already given us a reaction. So the chances that it gives us a second clean trade is a lot less likely, and I would have avoided trading this setup right here. So now I'm going to explain to you my 3 rules to correctly identify a high probability order block, okay? The first one is you want to be trading with the trend. So many beginner traders are going to be trading order blocks that are against the trend. For example, okay, as you can see right here, we're clearly trending higher. First of all, let me explain why. Okay, the market is trending higher because, as you can see right here, we're forming higher highs and higher lows, okay? There's a higher high right here, okay? There's a higher low right here because this low here fails to break past this low down here. We have a higher high again right here, which leaves a break of structure to the upside right here when we broke past this high like this, okay? And you can see that we are clearly trending higher, okay? Now, and because of this reason, okay, because we can see we are clearly trending higher, forming higher highs and higher lows, the only thing I would look to do is trade bullish order blocks, okay? I would never look to take bearish order blocks if the market is bullish, because going against the trend is the most simple way to increase your chance of losing, okay? The best thing you can do is go with the trend, okay? People say it all the time. It's a bit of a cliche saying, the trend is your friend, and it is very, very true, okay? You want to be trading with the trend because the likelihood is that the market will keep going in its previous direction. So if we can see the market is breaking structure to the upside, forming higher highs, and retracing and reacting from some sort of order block down here, then of course it only makes sense to look for buys. Why would you look to sell? Okay, and this leads me on to the next point. When it comes to actually taking these positions, okay, what you want to look for is a sweep of liquidity or a run of some sort of previous low or liquidity, okay, before tapping into this order block. For example, there definitely would have been some sort of order block down here, which I'm just going to draw out as this gray box, okay? But what's super important that we can see is we didn't just randomly just dump straight into here, okay? We had a bit of a trickle down, a bit of steady selling pressure, okay? And then we tapped into it, and then we saw the move up. Now, the reason why this makes a strong order block is because there was a sweep of liquidity shown by this right here before we tapped into the order block. This basically gives us more fuel to go to the upside because we've taken out early sellers who have been selling here. For example, maybe there was a fair value gap somewhere in this area like this, okay? There's a high chance that people might be looking to buy from this fair value gap. And as a result, if they take a buy position here, there's now buy orders in the market. And naturally, what price is going to want to do is take these buy orders out, basically stopping them out, as you can see right here, before tapping into the order block and then causing the move to the upside to continue the trend, to continue to break past this high right here and continue to the upside, okay? But as you can see, if you had traded before the order block, you would have been used as liquidity to fuel the move from the order block, okay? And that's why in this case, waiting for the order block is the best thing to do to avoid entering too early and to avoid being used as liquidity to fuel the move to the upside, okay? So what you can see you wanted to do is not enter from here, wait for the area that caused the big reaction to begin with, breaking structure from this high here, and then when we tap into it, then you can look to take a buy position like this. Then you can look to target this high up here, okay? And that there is going to be such a strong position because it's with the trend. We've seen a sweep of liquidity. And now let's go on to the third and final reason on how to find really high probability order blocks. So the third thing in identifying these order blocks correctly is you want to be trading from an area that has given you a break of structure or a change of character, okay? Some sort of market structure shift from this area is what you want to be looking for, okay? And if you don't see this, if the area hasn't given you a strong enough break of structure in this example, then you wouldn't use it as an order block, okay? So for example, this low down here broke past this high here, giving us a break of structure, and you can see there was big buying pressure, which means this area here is certainly valid to use as an order block, okay? However, continuing the trend, we end up seeing that we have failed to now break past this high up here. Okay, we're failing to continue to break past higher highs in the market. And as a result, trading from, for example, this area down here probably is not going to work, because this area here hasn't given us yet confirmation of a break of structure past this high here. Okay, so this area here is probably less likely to hold than this area down here, simply for the reason that this area hasn't given us our break of structure, but this one has. Now, if we understand that this one here is less likely than this one, of course, what we're going to do as we're trying to find the best probability order blocks is avoid trading from here and simply wait for price to come into the high probability one and then look to trade up from there. Okay. Now, in addition to avoiding this loss here, this position here is actually way stronger because we've now taken out liquidity from this trend line, right? All of these guys who were selling here, or sorry, buying here, they've now been taken out. And then this position from this order block down here, which gave us the break of structure, is so much more strong. So when it comes to identifying order blocks, guys, you want to be waiting for an area that's given you the break of structure, seen the sweep of liquidity, and is also with the trend. If you can find those three things and correctly identify the order block, you're going to be such a good trader. And I can guarantee your trading will improve. Okay. Now what I want to do is go into the live markets, show you what I'm looking for, and show you how I correctly identify order blocks in real time. Let's go. Okay, so here we are. What we can see is going on is the market is trending to the upside. You can see down here that this low caused this high, causes this higher low, because this low fails to break past this low down here, causes a new higher high, okay, because we break past this high here. Then you can see that we continue to place lower highs and higher highs in the market. We then do have a pullback, react to something down here, and then continue pushing higher. And you can see that this push higher gives us a massive break of structure, massive buying volume to confirm the trend is going up, okay? That's the first thing we can clearly see. We've identified the trend, and now it's our job to go ahead and identify an order block to trade from, okay? So let's go and actually look now more in detail in this leg of price here that caused this break of structure, okay? What we want to do is understand, has there been a big fair value gap from this big move up here, okay? Yes, there has been. You can see right here, we have a fair value gap right here, okay? And now we need to identify the order block. And to identify the order block, we literally just need to do what we did before, find the last down candle before this big fair value gap, which would be this one right here. And by the way, this is a bullish order block. And last time I was speaking about a bearish one, but I just want to show you guys that it works both ways, okay? So here is our order block down here, and we've identified we're bullish. It gave us a super big break of structure, okay? And there's the fair value gap. Here's our order block. And now what we do is simply wait to see if price will come into this order block down here. We're not looking to trade this fair value gap, but we're looking for a bounce from here to continue going higher, okay? So let's see how this ends up playing out. Price goes down, okay? And what I want to show you as well is it does give us a reaction from this fair value gap. So let's take a step back here first of all, because people do like to trade fair value gaps, okay? For me personally, I wait for the order block all the time, but you can see it does respect this fair value gap. However, the likelihood is, and the highest chance of you making money in these markets is if you wait for the order block, okay? And as you can see, these guys here who are buying from the fair value gap, they do end up losing and getting stopped out. Then it taps into the order block, and then it goes on a massive run. And where does it go to? It goes to break past this high here and continue breaking structure to the upside, continuing to form more order blocks, okay, which you can now trade from and continuing this bullish trend. So that's a perfect example of an order block. And I also want to show you guys as well that this here is on the daily time frame. You can see in the top left, it's on the daily time frame. And the reason I'm showing this to you is because you can use these order blocks on any time frame. Understanding order blocks is literally crucial in not just getting entries, but understanding higher time frame and of course getting entries on top of that. If you can understand order blocks and draw them to a high quality level, you could have then understood that the market's likely to reverse from this place, and you could have caught the entire start of a new uptrend from here, okay? All because you identified a daily order block, and if you now go ahead and pair that with possibly an entry on the 5 or 15 minute, maybe somewhere down here, you could have got yourself a sniper entry and carried this trade, right, all the way up to where? The next high up here, okay? Because if we're bullish on the higher time frame, then it's likely we're going to continue breaking past higher time frame structure, which is up here. And if you were able to get an entry on the lower time frame somewhere down here, that would have been a crazy position. That's like a 1 to 10 you probably could have caught. And that's from using higher time frame on the order blocks and then scaling into the lower time frame down here once we see the reaction from this order block to then look to target external structure being this high up here, okay? So that is how to identify order blocks. Now, the next thing I'm going to do is go over my exact strategy and show you an order block that didn't work and an order block that did work, and also the trades that I took using this strategy, okay? So let's head onto the lower time frame, onto the 15-minute chart, and I'll show you some real examples of trades that I took, some trades that I didn't take, and explain why I took them and also why I didn't take them. So let's go. All right, guys. So what I'm going to do now is go into the charts and show you an example of a trade that I took on Friday, the 28th of February, okay? And by the way, I'll show you proof and I'll show you everything. And I'll even show you that I called this trade out in my community as well, okay? But first of all, let's identify the trend. As we can clearly see, there's big selling pressure to the downside, okay? Thursday was a very, very bearish day. You can see lots of selling pressure. This area in particular caused massive selling pressure, leaving huge fair value gaps to the downside, okay, shown by right here. And as you can see, that selling pressure is enough for me to now look for sells on Friday. You can see that this selling pressure actually caused a break below this low here as well, okay? And that, for me, is enough to look for sells the next day. So now let's go ahead and look for our order block. What we need to do, of course, is wait and look for an area that has caused a move to the downside with fair value gaps. So I'm going to be focusing on this 15-minute order block up here. The first thing we can see is that it gave us a fair value gap right here. Perfect. Fair value gap number 1. It's also given us a massive fair value gap as well down here. Fair value gap number 2. Okay. So this area here clearly has a lot of selling pressure because it's got fair value gaps from it. So now what we need to do is draw out our order block. As we know, our order block is going to be the last up candle before the move down if we're looking for a bearish trend. So we're going to mark it out like this, drag it along, and this right here is our area that we're looking to trade from. Nothing else, not these fair value gaps here, okay? Because as I mentioned before, these fair value gaps, yes, they might be respected, but the highest probability setups will be from order blocks. So what you want to do, instead of looking for a trade like this, is wait for the order block and then look for the trade from the order block, okay? Now, going over a bit of my strategy as well, this trade right here was so strong. It was with trend, we've got a very valid order block, and you can see as well that we've not taken out the liquidity from the Asian session high. Now, this is the Asian session right here, okay? This box right here is Asian session, and I can probably make future videos on this, but there's always going to be liquidity resting above the high and the low of the session. So we've got liquidity above the high, and we've got liquidity below this Asian low as well that also hasn't been taken out. Now, if you know liquidity, you'll know that the market will be drawn to these points. So this just means the trade is even stronger, because if we are looking for a sell position from this order block, then we can now target Asian low because there is liquidity that hasn't been taken out from Asian low down here, which would give us about a 1 to 3, a 1 to 4, and that's a super nice position. So hopefully that will make sense. Just to cover it again, higher time frame bias is to the downside. Okay, we've seen a break of structure, we've got massive selling pressure to the downside, and we've got a very valid order block, Asian highs not taken out, and we can target Asian low. So now what we do is simply wait for this to happen. So let's go and see how it plays out, okay? First thing I want to show you guys is that there was really nothing going on for London session, okay? There was really no volume. And then in New York session, that's when price came into this area. And if you were just being patient and waiting for this supply zone here, you would have avoided any sort of potential losses in here. And as you can see, when price taps into it, bro, look at that reaction. And where does it go? To Asian low, where there was liquidity below, okay? That right there is a beautiful setup, okay? That was on February the 28th, and I'm going to show you as well. I called this out in my community, right, live on the call, and I sent in a screenshot of what I was looking for. Here you go on GU, literally identified this area before the market had even touched it, was even near it, and then you can see this happen afterwards, okay? That's the power of understanding order blocks. That's the power of understanding how to trade. You're able to predict the market. You're literally able to know what is going to happen hours before this even happens, okay? And that's how you'll be successful. Don't just guess where the market's going to react from, but understand where it's going to react from by taking the time to backtest and forward test and understand order blocks and understand what makes a good order block versus a bad one, okay? And then you'll be able to take trades like this. And this trade right here, super, super good position. It was about a 1 to 3.7, it says right here, okay? If your stop loss was even smaller, it could have been a 1 to 4, 1 to 4.5 even. And that right there, guys, is a perfect example of a winning order block setup. But now let me go and show you a losing one that you could have avoided if you knew this thing. All right, guys, so I'm going to show you how, although this looks like an amazing order block to trade from, I was able to avoid trading from it, okay, and avoid taking an unnecessary buy and an unnecessary loss. This is the part of trading that people mess up on so much. Yes, this here is an amazing order block. Yes, it gave us a fair value gap right here, okay? However, the trend and the market was not aligning with this order block, hence why I didn't take it. So first of all, let's go over the trend, okay? What we can see going on right here is we are trending higher, okay? We are just about forming higher highs and higher lows in the market, okay? If you look down here, massive buying pressure here, okay? Selling off here, continuing higher here, right? We did have a bit of a pullback down to here, breaking past this high up here, giving us a break of structure back to the upside, okay? We then pulled back down again, respecting an order block that would have been down here, okay? And then we pushed up one more time. So everything looks good. Everything looks bullish. Now, this is when the higher time frame analysis really starts to kick in. Just because we're bullish, right? Or at least we look bullish, that may not be the case, okay? And this is when having a super good understanding of higher time frame comes into play. And if you want to learn how I understand the higher time frame to avoid trading this order block, then you're going to need to watch this video right here on the screen for even more detail. But what I want to quickly let you know about is something called weekly profiling, okay? On a Thursday or on a Friday, if the market's been trending up all week, there's a very good chance that you might be looking for a reversal. Now, we can see the market's been trending up all week because on a Monday right here, we opened and we were literally just trending higher for the entire week. So now, what can we expect? Being it's a Thursday, being that a reversal is likely on a Thursday, and also we were reacting from a higher time frame supply zone, which I'll show you right now, that is why I wasn't looking to trade this order block. It wasn't high probability as it wasn't with my higher time frame analysis. Now let me quickly show you as well the area that we were reacting to on the daily time frame, okay? We have this area up here where price was in at the time I was looking for a trade, okay? And as you can see, this area up here, this supply zone gave us a massive amount of selling pressure, leaving fair value gaps as you can see right here. So what I was thinking is because we've been trending up all week, it makes sense that towards the end of the week, possibly on a Thursday or Friday, we can look for this supply zone to be respected. And that is why I wasn't too confident on this order block, okay? So let's now go and show you what happens when price came into this order block. As we can see, we go lower, okay? And this is another thing as well. The selling pressure coming into this order block was very, very strong, and it was too strong for me to consider trading it. This is a bonus tip. If you're watching this video and you're still here to the end, first of all, well done. And second of all, when trading these order blocks, even if it looks perfect, okay, even if the order block is very good and it's giving you a fair value gap and it's with the trend, if there's massive selling pressure coming into it, you need to be cautious. You need to understand that this might be an indication the market is going to keep on going lower, okay? And that's why I didn't trade this order block, and that's why I said in my community, I probably won't trade today due to a lot of news, and if I was looking for a trade, I'd probably look for sells because I expect it to go lower, right, based on the higher time frame, and I don't expect this demand zone to hold. It's very weak, as I literally said right here. Now, I sent in a picture of what I was looking for, which was actually for price to go lower through this order block, okay? And as you can see, this order block here was not respected. Now, had I not understood higher time frame, I would have taken a loss here unnecessarily. But because I understand higher time frame, because I understand order blocks, because my understanding of the market as a whole is excellent, I'm able to not just catch wins, like I showed you before, but avoid losses. And that, my friends, is the key to success. So guys, I hope you enjoyed this video. Make sure to smash that subscribe button. Make sure to leave a like. And if you're looking to join my community to trade live with me every day and know what I'm looking for on the markets every single day, then hit the first link below in the description. Other than that, I'll see you on the next one. Thank you for watching. Peace.